the fiat money world and everything that's not Bitcoin is going to zero against Bitcoin. So if you're not in Bitcoin, whatever it is you're in is going to zero against Bitcoin. So if you buy Bitcoin today, in 5 years' time, your purchasing power against everything else, fiat money, gold, property, will be considerably better. So just look 5 years down the road.
Let me introduce you to Max Keiser, a giant of the Bitcoin and financial industries. Being a seasoned broadcaster and investor, Max hosts the Keiser Report and has an expertise in the specifics of the industry. However, his early understanding of Bitcoin's potential is what makes him unique. Back in 2011, when Bitcoin was trading for just $1 per coin, Max was among the few who saw its disruptive power. He saw the enormous potential that Bitcoin offered immediately, drawing from his background as a part-time stockbroker in the 1980s. Max just finished an interview in El Salvador, where he and his wife, Stacy Herbert, are enthusiastic supporters of President Nayib Bukele's Bitcoin-related actions. In this interview, Max boldly predicted that Bitcoin will be valued at an astounding $10 million, citing the impending demise of traditional currencies. However, Max is not simply a supporter of Bitcoin. He also actively opposes Wall Street players' entrance into the cryptocurrency market. Even while he sees certain positives, he is still cautious of Bitcoin ETFs because he thinks there are more dangers than benefits, particularly for investors who want to preserve Bitcoin's decentralized principles. Come along as we discuss Max Keiser's perspectives on Bitcoin, money, and the future of money.
First of all, look at Bitcoin in other currencies other than the US dollar. So in Argentina and these other countries, it's screaming to new all-time highs and making almost vertical up moves. And more than half the world's population lives in countries where the currency is collapsing already. The US dollar is the cleanest shirt in the laundry. You know, it's the leper with the most fingers. I used to say more often until people told me that that was no longer politically correct to say that. Nevertheless, against all these other currencies, Bitcoin is already screaming to new highs. Against all fiat money, the use case for Bitcoin is, and I mean, this could get into the broader argument of getting back to the history of Bitcoin, and this is the epoch, because remember during the earlier epochs, there was this idea that Bitcoin needed to handle more transactions, it needed to be faster, it's a medium of exchange, and this is what Satoshi wanted. And then that's an interesting sidebar that I have a lot to say about as well. But so against all these fiat money, it's already increasing its purchasing power against all this fiat money quite aggressively. And so anybody who would want to protect their purchasing power of having an asset that is going to allow them to go into the future with their purchasing power intact and even enhanced, there's no better answer than Bitcoin. Nothing comes close to Bitcoin to maintaining purchasing power and increasing purchasing power into the future. Nothing comes close. I mean, gold is kind of the nearest cousin to Bitcoin in the physical world, and it will continue to outperform gold very dramatically. It's outperforming property. I think part of the reason the property market is collapsing is because people are moving money into Bitcoin. The ETF market and the attraction of Wall Street obviously is adding another huge pool of capital into Bitcoin. It is decentralized. People say, well, the ETFs make Bitcoin less decentralized. That's completely false. We can get into that, but that has nothing to do with the centralization or decentralization of Bitcoin, because the decentralization aspect of the protocol speaks to the consensus, the underlying consensus mechanism that's proof of work and not proof of stake. So it doesn't matter if Larry Fink has 300,000 Bitcoin. He cannot change the protocol. He has no influence over the protocol, no more influence over the protocol than if this person was 5 Satoshis. So there's an incredible democratic appeal right there. It's a meritocratic appeal. So and the decentralization of Bitcoin keeps getting more decentralized because you get more nodes. I mean, I will say this about the ETFs. It is an tempting honeypot. If the state wanted to confiscate Bitcoin, they would go after Coinbase, that's the custodian for all these ETFs, and they would potentially commandeer or seize Bitcoin, as they've done in the past with gold. I mean, I think that's a legitimate risk. I think people who are not self-custodying their Bitcoin are taking an unnecessary risk with their Bitcoin. But nevertheless, I would say that's a risk. But in terms of the overall decentralization of the protocol, it has no impact because it's proof of work, not proof of stake. So the people who are successful money managers are always reducing risk to get that rate of return. And so institutionally, they have tools for them to eliminate their risk. So Larry Fink has a lot of Bitcoin in his ETF. He also has a lot of hedges on to protect himself on any downside. And those hedges for him are relatively cheap to being free, whereas the retail investor can't afford those types of hedges. And they can't manage those types of hedges. So they're just taking that risk face right in their face. And then so it's an asymmetric relationship between Larry Fink and everybody else, number one. Number two, as you point out, rightfully so, it's a proxy. It's not actual Bitcoin. So if you think you're buying Bitcoin when you buy an ETF, you are not. When you think you're having Bitcoin on an exchange, it's risky. There's only one way forward, and that would be self-custody.
Max Keiser understands the benefits of spot Bitcoin ETFs while having a strong mistrust of Wall Street. He admits that these ETFs have shown Bitcoin's potential to compete with gold and conventional fiat currencies as a Bitcoin maximalist. The withdrawal of funds from gold exchange-traded funds, ETFs, was so substantial after their inception in January that even well-known proponents of gold, such as Peter Schiff, suffered weeks of turmoil on Twitter. In addition, the popularity of spot Bitcoin ETFs has increased trust among consumers in the cryptocurrency and propelled the current bull market. The price of a single Bitcoin has increased from little over $40,000 to an all-time high of nearly $73,000 since January. Max gives this to both the effect of Wall Street on Bitcoin and the effect of Bitcoin on Wall Street. Investors are becoming more and more aware of the necessity of boarding the Bitcoin bandwagon in order to seize important possibilities. Going back to Max's interview, he goes into more detail on Bitcoin, the US dollar, and his predictions about the coming collapse of the world monetary system.
I've always said that Bitcoin has no top because fiat money has no bottom, right? There's no backing for fiat money. It's just paper. And I think a couple of things we're going to see happening. Number one, people will no longer accept fiat money for Bitcoin. So you're going to try to buy Bitcoin with your fiat money, and no one will take your fiat money. No one will take dollars at all. So that will be a moment of panic. They'll be like, "Oh, what?" It's like, no. So here's $1 million. Here's $10 million. I want one Bitcoin. Like, no way, amigo. We don't want that shit. It's worthless, right? So that's going to be panic. Then people are going to have to trade in other stuff for Bitcoin, like gold, their house, right? And then people are going to be panicked. They should be panicked because the world we live in now is a fake world that's been created with the hologram of fiat money. And in that hologram of fiat money, many weird things are going on. Traditional values that held society together for thousands of years are being tossed out the window. And just like basic values, it's just a very basic idea that like a moral value or an ethical value or mathematical certainty, 2 + 2 = 4. These types of things are being challenged, like in the Cultural Revolution of Mao or during the totalitarianism of Stalin. It's so 1984 Brave New World-esque. And it's like the people who, again, proof of stake or fiat money breeds a kakistocracy. That would be the rule of the worst amongst us. And because they can print more money to pass new laws to make it easier for them to print more money. So it just becomes a collectivist, socialist, communist, fascist, totalitarian nightmare. All those things are all basically the same. Yeah. And it's centralization, it's hyper-centralization. And it's happening now. And unlike at any period in history before, though, there's going to be a cohort of folks who own Bitcoin. And those people are going to move to El Salvador, where Bitcoin is legal tender. So there'll be a mad rush, like those images of people panic leaving Saigon at the end of the Vietnam War and trying to scramble on the last helicopter. That's going to be at JFK, people trying to scramble onto the last flight to San Salvador to escape the hell of the fiat money apocalypse. The risk of buying Bitcoin today is less than it's ever been. So it's less risky to buy Bitcoin at 65, 70,000 than it was to buy it at $5. You're taking less risk. And so you have the benefit of being exposed to all that risk for all these years, because the market is more established, it's deeper, there's more players, and the use case and everything is more developed. So the risk reward ratio has never been better. So you're making a risk off investment. It's not a risk on investment. It's a risk off investment. And number two is that you have no choice, because the fiat money world and everything that's not Bitcoin is going to zero against Bitcoin. So if you're not in Bitcoin, whatever it is you're in is going to zero against Bitcoin. So if you buy Bitcoin today, in 5 years' time, your purchasing power against everything else, fiat money, gold, property, will be considerably better. So just look 5 years down the road. And do you want your purchasing power to be mathematically guaranteed to be higher? Or do you want your purchasing power to mathematically be lower, as it would be the case with fiat money and anything else that's not Bitcoin?
In the midst of his conversation, Max Keiser revealed several insightful observations that brought to light the basic flaws of fiat currency and the revolutionary possibilities of Bitcoin. He underlined that, in contrast to the free nature of fiat currencies, the value proposition of Bitcoin rests in its limited quantity and mathematical certainty. He believes that when individuals start refusing to take fiat money in exchange for Bitcoin, a turning point will happen. When people discover their currency possessions are worthless, this move will cause panic. They will therefore rush to obtain Bitcoin by utilizing other valuables, such as gold or even their homes. Keiser warned of the risks of a system where fiat money allows the governing class to maintain its power by harassment and manipulation. He compared it to the chaotic sights of people leaving Saigon at the conclusion of the Vietnam War and presented a vivid picture of a future when Bitcoin holders move to nations like El Salvador, where Bitcoin is legal money. Despite the seeming volatility of Bitcoin, Keiser emphasized that there is less danger involved in investing in it now than there was in the past. Based on a more developed market, increased liquidity, and wider acceptance, Bitcoin has a significantly higher risk-reward ratio. In the end, Keiser's point is very clear. Bitcoin provides a way to achieve financial independence and shields people from the disadvantages of fiat money. For those pursuing a better and more open financial system, Bitcoin offers hope in a world where traditional values are vanishing and centralized authority is growing.